All right, guys, let's talk about SoFi stock and why I'm buying as much of this stock as possible. But it's not all roses and sunshine. There is absolutely a massive warning that you must understand in order to own SoFi stock. So let's talk about exactly why I'm buying as much SoFi as possible right after you hit that like button, if you like getting the truth off the hype, because that's exactly what you're going to get today, guys. And for those of you guys that are looking for to the moon predictions, well, I guess to the moon. There you go. We got that out of the way now. Now, you'll be happy. Everybody else who wants the truth off the hype, let's get started. And we'll start off with the first of 5 reasons why I'm buying SoFi stock. Then we'll get to the warning as well. I promise you got to understand all pieces, right? You guys know that. You got to understand the bull and the bear case against your stock, because if you don't account for one, unfortunately, that's how we get in trouble a lot as retail investors. So we kind of ignore all these problems over here, but then, we focus on the highlights over here and the hypey stuff and all the flashy things over here, and we end up missing out. And we don't want to make those mistakes. So number one is share count is what matters. All right, you guys know on this channel here, I preach share count all the time. And it's very simple. Whenever your stock finally goes on a big run, an epic run, right? A nice, double up or a 5x or even a 100x, if you happen to get one of those, we all say the same exact thing over and over and over again. I wish I would have bought more, right? We all end up saying that. But that's not enough. That's just anecdotal there. Let's put some actual math to it as to why I feel share count is the most important thing. And it's different for everyone. So obviously, if you got a $10 million portfolio, obviously your share count's going to be completely different than somebody with a $10,000 portfolio. So there's not really one rule to apply across the board. However, I will say share count in a great company that you have high conviction in, that you want to own long run, is far more important than your average or anything else of that nature over the long run. Now, short term, of course, we're talking something totally different here, but we're talking long term. We're long-term buy and hold investors here. That's exactly what I'm talking about there. So I would much rather, when we were buying shares back in the $4 or $5 range or so, that was awesome. But guess what I had to do at some point in time? I had to blow up my average. I had a great average back then. Again, that was 2022. It was a great time frame. You could buy it on rinse and repeat. It felt like for months, maybe even a full year. You could buy it at a great price and have a really, really low average. But instead of owning 10,000 shares, we'll say at a 450 average or so, I would much rather own 100,000 shares at an $8 or $10 average, because I have far more shares at that stage. And again, like everything else, just simply put the math to it. If SoFi goes to $25 per share, $50 per share, $75 per share, wherever you have it out there in the future, would you rather have 10,000 shares or 100,000 shares, even with the average being, virtually half of the other share count? I would much rather have the higher share count, because I'm going to have way more money in my account, especially if SoFi does some of the things we feel it can do in the future. Obviously, that's all speculation at this stage, but if they truly outperform, you're going to wish you had every single share that you had. So that's the first reason why I've been buying it. Basically, this entire time since 2022, every time it's gotten undervalued, is because I know share count is what matters in the end. Number 2, earnings performance. We all know it. It's clockwork, right? It's, hey, they're going to give us guidance, they're going to beat said guidance, and then they're going to raise said guidance. Rinse and repeat now for 15 or 16 straight quarters. It is an amazing run. They continue to perform on earnings. And no, I don't care that somebody's out there saying that they should be less sandbagging and pumping up this price or pumping up the EPS or doing all these other silly games to try to create, all sorts of crazy scenarios that have nothing to do with fundamental investing. They are performing on earnings incredibly. There has been very few stocks in the stock market, and I'm talking mega caps all the way down, that have performed better for this long, this consistently, than how SoFi has performed over that particular time frame. So for me, I'm getting one of the top, if you want to call it top 10, you want to go a little more aggressive than that, okay, I could buy that. But you want to start getting outside the top 10, I'd say, ooh, wow. Sure, some companies had individual quarters that were incredible, but sustained for that long, for that many quarters, almost 4 years worth of quarters now of sustained great performance from a company, it's really, really hard to find. Next up, valuation is still attractive. Now look, this isn't like getting shares back in the 9, 8, 7, range like we were getting last year. And obviously you were able to pick some up below 10 there, right during all the tariff craziness and all that good stuff. However, it's still sitting at a fairly decent valuation. I'm not knocking it. This is not Tesla. This is not Palantir. This is not those stocks to where they are significantly overvalued, and nobody's arguing that they're not. It is still right around, if you want to call it in that fair value range, I wouldn't argue with that case there. So for me, the valuation is still attractive. Again, if this was trading at $45 per share, I wouldn't be buying shares at that stage, but we're obviously a lot lower than that. So the valuation is still in line, not a bad price at all. And again, share count's what matters. And you got to keep that in mind as a long-term buy and hold investor. That's got to be your focus. That's why I continue to add shares when the valuation is very reasonable. Next up, fintech is still out of favor. Look, fintech is finally starting to move. We're finally starting to get some excitement. And I don't really care about this because the longer it stays in the doghouse, the more time we get to stack shares. Again, going back to point number one, share count's what matters the most. For me, it's still a great time to buy it because it's just out of favor right now. Starting to show some signs, but right now AI is still a hot trade, and anything, related to AI, you just say AI, you're a hot trade, whatever the case is. That's kind of a hot movement right now. So we can call it lukewarm at best there in regards to where it's at. So we're definitely not overheated. We're definitely not in a hype cycle or anything else of that nature. So obviously that's another reason for me to want to stack shares. Again, I'm not into chasing the latest hot whatever. No. I'd much rather buy, Palantir whenever it's out of favor. I'd much rather buy SOFI when it's out of favor. Tesla when it's out of favor. Google when it's out of favor. Obviously it's one, Google, Amazon, those guys. That whole buy low and then hold strategy that a lot of folks seem to eschew for buy high when it's on a hype run. We don't do that here. Fintech wants to stay, kind of beaten down. Hey, great. That works to our advantage. And finally, 2026 and 27 will be big years. All right, put all of the hype that you've heard on internet, on X and everywhere else to the side. I don't care about any of that sort of stuff. I told you guys from the start, I care about what management says on earnings. And management did not say, regardless of Noto's pay package or any of the other little conclusions that everybody tries to draw, he said, hey, 2025 is not going to be a massive year in terms of huge profitability numbers down at the bottom line, huge, massive chunks of the business coming in. It's more of a setting year for the future year. They see much larger gains in 2026 and more importantly, 2027. That is how the business is geared. So everybody else talking about all this other nonsense, who freaking cares? It's not coming anytime soon. Anybody wanting that is just simply selling you a hype narrative, and it's not going to happen, at least from the performance of the company. The great performance, the great fundamentals that we're looking for are coming in the future. Now, they're still giving us good fundamentals right now, but the big leaps in service, the big leaps in EPS, the big leaps in revenue, according to management, in an earnings call, nothing else, no hype videos, no let me piece together 8 different interviews to try to make this cohesive story. What they're saying consistently in earnings is that's coming in 2026 and 2027, which means right now, there's not a whole lot of hypey stuff to get excited about, which of course means the stock price should stay reasonable, which of course means I get to add those nice low price shares before all that sort of stuff happens, before the storm happens. And the fact that I'm getting great earnings performance before the big numbers even come in makes me even more bullish on the company. But again, it's not all roses and sunshine. There are 2 warnings you have to understand with SoFi stock. 2 of them, guys. You got to understand these or else you're going to get roasted with SoFi sooner or later. I don't want to see that happen to you guys. So make sure you're keeping these 2 in mind. And the first one is a Fintech multiple is not guaranteed. Now, I've said from the start, I think we're going to get a hybrid multiple. I know there's a lot of folks out there saying they should be getting a pure fintech multiple. I can't make that case either. Too much of the business will come from the banking side of the house for me to give that number. And I also don't think that it's going to go all the way over here to the banking as well and give us a bank multiple. However, it is a risk factor you have to understand that although it may not come all the way over here to traditional bank, I also don't think we're coming way over here to that fintech multiple up in the 40, 50, 60 range over here as well. Kind of somewhere in the middle is kind of where I feel it's going to fall. It is possible it could fall more towards the bank multiple than we like. So you end up with a multiple more of a 20, 25, something of that nature. Maybe even lower, who knows? You never know with Wall Street, but it is a possibility and it is something that you have to understand with this stock. And number 2 is extreme hype. I'm sorry, I don't know what happened, but boy, it seemed like at tail end of last year, especially the community and SoFi kind of turned into this, Robinhood versus SoFi, which is an utterly ridiculous argument. When you really get down to the fundamentals, we've talked about it before on this channel. Obviously, group members, we've also discussed that at length as well on separate videos in there. And then you had the Noto's the greatest CEO ever. It's going to 75 soon or 150 soon, whatever the heck the number was. Then he was like the worst CEO ever when he didn't, try to pump up the stock the most on an earnings call. And it was just all that type stuff. You got to just kind of get past and just look at the fundamentals. Just simply listen to what the earnings calls are saying. Again, this community wasn't this way before. And SoFi had a very, really investor-friendly community, very realistic community, folks understanding what they own, understanding what's going on with the stock, and then kind of the hype beast kind of took over. And unfortunately, there's more of that than anything else going on out there in regards to SoFi. At least that's the loudest noise. Maybe I should say that. That's why we say ignore the noise in here. You've got to ignore the hype of SoFi. Get down to what management's telling you. Do actual valuations. Get down to those fundamentals. Hey, what did management guide towards? They'll tell you, they've given you EPS guidance for this year and for next year. You plug those in, give yourself a reasonable multiple there, and you're able to accurately assess what fair value would be for SOFI, for 2025 and for 2026 as well. So that way you can avoid all the hype in the end. And if you want to know exactly how to do that, actually, I got a bull and bear case where I actually lay out exactly how to do that for SOFI, exactly how I did it step by step to include my bull and bear case for SOFI, complete with prices and everything else. I may have left something special down in the pinned comment for those that have made it this long. Check it out, see if a membership's right for you. We got free coaching, got free courses, be a part of the best 6, 7, and 8-figure Discord out there. I put out 3, 4, 5 videos a week that are just exclusive to in there. They don't see the light of day here on YouTube. Obviously, you get direct access to me anytime you want. We got live streams. So much going on, guys. Check it out. It's the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.